are a number of procedures that you want to follow to create the maximum security in your QuickBooks company file. The first one is in QuickBooks, you want to make sure that everyone who logs in has their own independent password. So even yourself, if you are the only company, the only person in QuickBooks, the only person in your company, set up your own password for admin so that someone else cannot get into your books. And then you would add users. And when you add a user and you set up a password for them, you then get to go through and you can say that they get selected access to areas of QuickBooks. And you can go through and say, do you want them to be able to access all of the different areas? If they are involved with sales, yes. If they're involved with purchasing, yes. Do you want them to be able to write checks and execute credit card transactions? No. Do you want them to have full inventory control? Yes. Track their own time, enter time into QuickBooks? Yes. Do you want them to be able to access payroll and employees? Probably not, unless they are the payroll person. And do you want them to be able to see your financial reports, to access your online banking, to be able to make journal entries for you in QuickBooks? Possibly not. Do you want them to be able to look at the detailed financial reporting in QuickBooks? Probably not. Do you want them to be able to delete and change transactions in QuickBooks? You can say yes or no to each one of those. Yes, they can delete it. Yes, they can change it, whatever it would be. And then it will give you a summary. And you finish, and now you've got a user called John in here. And so for each person that you have, whether it's a receptionist or a full charge bookkeeper or a salesperson or an accounts receivable, accounts payable, go in there and just specify all the controls that they have. And that will execute your security, because the biggest problem in security is always that people get into QuickBooks and get things that they should not get within your own team. The next area of security is your internet security, and that is very standard these days, but make sure that you do have internet security that is fireproof, because there is software that without the right internal controls that will be able to watch everything that you enter into your computer system, and it will capture everything, your passwords, anything that you put into it. With a good, strong security system, you can be protected from that. Virus protection is also, of course, very critical. You can use QuickBooks in two modes. You can use it in single user mode and multi-user mode. And this is an internal control that QuickBooks has created. When you have a lot of users in the system, anytime that they want to make a change to your preferences that are a company change. So when we look at edit preferences and we go to the company preferences, anytime that someone wants to go in here and make a company-wide change, the only way they're going to be able to do it is if they are in single user mode, which is the way this is set up right now. And then when you switch it to multi-user mode, multiple people can be in your QuickBooks company file at the same time. But you'll periodically get a prompt to say you need to be in single user mode to change that, and that's because it's liable to change it across multiple users' rights and ways that they conduct activity in QuickBooks, and everyone has to get out so you can make that change so that it changes across everyone. And then more security in QuickBooks. When you are securing your data in QuickBooks, you want to do an effective backup system. And if you're on a server, the server is being backed up, then that is ample. If you're on an independent computer, there are probably about one person every 2 or 3 months that comes to us and says that they have lost their data on their QuickBooks company file. And if they've got a backup, it is wonderful news. They can get the data that they need. We can restore it and get it back up to date, and we're all good. If you don't do that, then you should get either on a flash drive or on an external hard drive, or a lot of people now are going to the cloud for a fairly nominal fee. You can have your data backed up. So this is another action item. You should You should positively make sure that your data is being backed up on a periodic basis, whether through automation or you are doing it and executing the activity. Another thing to do is for passwords. Set it up so that on your calendar system, go into your calendar system and implement an activity where once every 3 to 6 months, all of the passwords are changed for QuickBooks and maybe for a lot of other things that you do. That way, if people are accessing your data or they have gotten your password and they're doing things, it's going to stop at that point forward, and it just protects you. Other areas that we want to talk about for backing up your data, you can do in QuickBooks. You can do a number of things. When you're going to bring a company file to your accountant, we like you to make an accountant's copy. And this is an easy process whereby you make a copy of QuickBooks, of your QuickBooks company file, and you give it to us. We can go and change things in it, and it creates a file that says, here's just the changes that were made. Go and import them back into your file. And in the interim, you can be actively using QuickBooks and doing all of your own work, and when we make our changes, it will just go right on the top of your changes, and no one has to stop using QuickBooks. If you bring in a backup copy, then when we restore it, make our changes, and create a new backup and give it to you, that new backup is going to overwrite everything that you've done. So if you're not going to use QuickBooks for a period of time, then you can make us a backup and we can restore it, do our changes, and give it back to you and restore it back on top of that. But the better process is to do an accountant's copy if that's the case. You have the ability in QuickBooks to import and export data that we've talked about before. And I have one client in particular that will always export their financial statements when they get them. They'll create a profit and loss statement, and then they will export it to an Excel file like this. And this process allows them to say, here is a snapshot of my financial statement, and it's stuck there in my Excel file, not to be changed or in any way. And so if anyone makes any changes to my accounting records after this point, I can always go back and see the old stuff, and it's locked in time. So I have a client that always does that because of the critical nature of their financial statements, and it's a great tool to guarantee that if there's any changes, they're going to know about them. All right. There's another activity that you can do in QuickBooks, and most people don't know about it, don't understand, don't do it, but it is important to know just enough about making journal entries. Journal entries in QuickBooks are almost never needed. But there are a couple times where you would need a journal entry, and one of them is when you get done with your tax return at the end of the year, you need to record adjustments, some adjustments that happen. One of them is depreciation. That's something that the only way you can do it is to debit the depreciation expense and to credit the accumulated depreciation for the amount. When you sell an asset, you also need to do a journal entry to remove the asset and the accumulated depreciation from the books. And when you buy an asset, sometimes you can do it through a check. When you write a check, you can record the asset, but if it's not fully recording the asset and the liability, then you need to do a journal entry to record it. But those are basically the only times in all basic, simple company files where you need to do it. If you're reporting detailed financial statements to other parties, in other words, you have a bigger company and you have people that you're accountable to for accurate financial statements, you may do a lot more journal entries. But for the intents and purposes of this seminar, it's very infrequent. At any rate, you'd have your debits and your credits. You can create you create journal entries for anything you want. QuickBooks automatically creates journal entries for activities that you do, such as when we talked before about the sales tax and making an adjustment to sales tax, that produces a journal entry for you. And that's all great, fine, and dandy that they're creating that for you. But journal entries literally are just used so rarely, and when we find company files that have a whole bunch of journal entries in them, I actually start to get concerned. So that's it for this segment. Thank you.